Welcome back, everyone. I'm Corbin Fraser here with this week's biggest and best stories. So crypto is at a breaking point. Centralized exchanges are feeling the heat. SEC cases are crumbling all around us, and worldwide adoption is very much on the horizon. So lots to talk about this week. Let's jump right in. The crypto market nosedived on Tuesday after Trump's trade tariffs continued to rattle investors, sending Bitcoin below 90K and triggering a massive altcoin sell-off yet again. So Ethereum, Solana, and all friends tumbled. Meme coins got crushed harder than ever, and the sell-off followed Trump's confirmation of 25% tariffs on Canadian and Mexican imports and 10% on Chinese goods. Now, fears of inflation, economic uncertainty, and rising treasury yields sent investors fleeing risk assets, and crypto markets were hit harder than the traditional markets. So the crash highlights, crypto's growing link in the macroeconomics. A space once seen as kind of immune to traditional finance is now seemingly very much correlated. So speaking of pain, the Bybit exchange hack made huge waves in the crypto world this week with over $1.4 billion stolen, making it the biggest cryptocurrency hack ever. Now, the stolen funds were entirely in Ethereum, instantly turning the attacker into one of Ethereum's biggest whales. So the mystery hacker or hackers, believed to be the Lazarus Group, a cybercrime unit linked to North Korea's Reconnaissance General Bureau, split their fortune across 54 wallets, making it harder to track and recover. Despite their evasive tactics, blockchain analysts and exchanges have already flagged the stolen funds, making liquidation very much risky. So far, $140 million has been shuffled, some converted to Bitcoin and meme coins, while $43 million was frozen by Bybit and its partners. But with every move etched on the blockchain, the hacker's shadowy game is far from over. Investigators, including Bybit, CEO Ben Zhao, and blockchain sleuth Zach XBT, trace some funds to Solana-based meme coin platform Pump.fund and cross-chain transfer platforms Chainflip.io, with Zhao urging bridges to block further conversions. Now, Zach XBT's findings reveal a complex laundering web with dusted addresses and rapid meme coin swaps, hiding transactions. Authorities and exchanges are now heightening scrutiny on meme coins as illicit finance risks continue to grow. Meanwhile, EXCH.CX, the exchange reportedly facilitating the laundering process, has refused to cooperate, even publicly posting Bybit's interception request. Bybit is now enlisting Interpol and international regulators to halt fund outflows and recover stolen assets, offering bounties to those who help trace that juicy loot. Over to the FTX saga, and a new survey shows that 62% of FTX creditors plan to reinvest their repayments into Solana, making it the top crypto choice post-reimbursement. Now remember, FTX creditors are the people who had crypto on the now defunct exchange, and they're currently in the process of getting paid back after years of being locked out of their money. Just a reminder, not your keys, not your coins, so take note. Anyways, so despite all of the recent rug pulls and scandals, 44% of those creditors are doubling down on Solana's ecosystem, citing its speed, low fees, strong fundamentals. Meanwhile, 31% are eyeing Ethereum projects, 16% favor BNB, and 9% are exploring protocols. So interestingly, 1/3 of FTX creditors are going all in on meme coins, while another 31% are targeting AI coins. So if Sol drops below $145, 71% say they'll buy more and or hold. So another centralized exchange, OKX, just took a $500 million hit, pleading guilty to running an unlicensed money transmitter business and violating anti-money laundering laws. So the exchange allegedly allowed US users to trade billions in illicit transactions while pretending to block them, even coaching clients on how to fake their location. So the evidence was so overwhelming that OKX didn't even fight it, opted just to pay the massive fine and move on. So this comes after Binance's record-breaking $4.3 billion penalty last year, showing regulators are cracking down hard on crypto exchanges that are trying to skirt US laws. So the SEC has officially dropped its investigation into Uniswap Labs. After 4 years of scrutiny, the probe, which focused on whether Uniswap operated an unregistered exchange, ends with no enforcement action. So this follows similar SEC reversals on Coinbase, Robinhood, Crypto.com, OpenSea, signaling a bit of a regulatory shift under acting chair Mark Uyeda. With former chair Gary Gensler out and new leadership prioritizing clear crypto guidelines, the era of aggressive enforcement may be over. And all eyes are on Ripple, as it could be the next SEC case to crumble. So for Uniswap, this means no more legal uncertainty, and for the DeFi system as a whole, it could ignite fresh innovation and investment in a more crypto-friendly regulatory landscape. The SEC's crypto task force just met with strategy chairman Michael Saylor to discuss a new crypto regulatory framework that could redefine the industry. Saylor's vision, a clear 6-category classification for digital assets, lower regulatory friction, and a rights-based approach to legitimize crypto. So he argues this could strengthen the US dollar, fuel market expansion, and position the US as a global digital finance leader. With SEC Commissioner Hester Pierce leading the charge, the shift could mark a turning point. Less enforcement, perhaps even more innovation. Crypto adoption is booming in Australia. According to a survey conducted by Australia-based crypto exchange Independent Reserve, 33% of Australians have owned cryptocurrency. Nearly 60% of them are reportedly in profit. Bitcoin remains the top choice, held by 70% of the investors. However, banking restrictions are a concern, with 19% of users reportedly blocked or delayed transactions. So meanwhile, optimism is rising as 31% of those respondents see Donald Trump's return as a boost for crypto and Bitcoin. Over to Africa, and South Africa's DeFi market is on the rise. So a new FSCA study projects DeFi volume will explode from $2.8 million this year to $180 million by 2028. With retail users leading the charge, payments, lending, borrowing, all dominating the DeFi use cases, while mainstream crypto adoption and new platforms are expected to drive growth. However, regulators do warn risks like fraud and smart contract vulnerabilities. So the FSCA plans to engage stakeholders to shape a safe and inclusive DeFi ecosystem, a move that could define the future of decentralized finance across South Africa. Malaysia is also making crypto moves. Prime Minister Anwar Ibrahim is strengthening ties with Bahrain and the UAE, focusing on crypto frameworks, digital finance, regulatory modernization. During a visit to Abu Dhabi, Anwar met with Binance founder Changpeng Zhao, or CZ, and UAE officials to discuss potential regulations that could shape Malaysia's crypto future. So with growing interest in blockchain, innovation, tourism, and fintech, Malaysia is positioning itself as a key player in the global digital economy. Stablecoins are hitting UAE checkout counter. So payments giant Arab Financial Services is teaming up with Ternoa to bring stablecoin payments to point-of-sale terminals, making crypto transactions seamless for everyday purchases. So their new PayFi network, Athar, will integrate with merchants across UAE, unlocking a faster, more secure way to pay with digital assets. With AFS backed by 37 banks and the UAE pushing fintech innovations, this could be a major step towards mainstream stablecoin adoption across the MENA region. Meanwhile, USDC and EURC just became Dubai's first officially recognized stablecoins, allowing 6,000 companies in Dubai International Financial Center to legally use and promote them. With USDC holding 25% of the $230 billion stablecoin market, this move cements some regulated crypto adoption across the Middle East, bringing stablecoins further into the global financial system. Athena Labs just locked in $100 million from top-tier investors. The team behind USDE, the third largest stablecoin by market cap, has secured major backing from F Prime Capital, Franklin Templeton, Pantera, Polychain, and much more. With USDE's yield reaching as high as 30% APY at times, the project has drawn both excitement as well as some scrutiny. So Athena is building its own blockchain, joining the likes of Ronin and World. It begs the question, as we witness the next evolution of DeFi stablecoins, or is this just another high-risk experiment? And for our final story of the week, we have an exciting announcement from Resolve AI. Resolve AI is making a massive bet on Bitcoin, launching a $1 billion Bitcoin treasury, starting with an initial $100 million investment to power its AI-driven crypto payment platform, which is in partnership with Tether. So the initiative aims to accelerate mainstream adoption of Bitcoin in retail, providing real-time crypto transactions, zero merchant fees, and instant crypto to fiat conversions. So by holding Bitcoin, Resolve AI is ensuring liquidity and financial flexibility for its growing crypto commerce ecosystem. Set to launch later this year, the platform will integrate AI and blockchain to make crypto payments seamless and scalable, allowing retailers and consumers to transact easily with BTC, USDT, and other digital assets. So Resolve AI's vision is to bridge the gap between AI, crypto, and traditional commerce, reshaping the future of retail payments. And that is a wrap for this week. Centralized exchanges are in chaos. Regulators are backing down. Crypto adoption is exploding. Will Bitcoin reclaim its momentum? Will DeFi thrive under a new regulatory landscape? And this is just the beginning of the stablecoin takeover. Let us know in the comments. We'd love to hear from you. Like, subscribe, and follow across all our socials for more breaking updates from Bitcoin.com news. We'll see you guys next week.